it's important when you're defining what's the reason for your entry point within your strategy or the strategy that you select with Alphachain. It's not the be all and do all of strategies, right? Okay, in the program, what is covered is STEM, ST sort of EM, right? So STEM is covered, right, in depth. Okay, what is STEM, right? You've got the setup. Yep, the setup. What's the reason for your your strategy, right? So you might say, I've got a resistance, I have my support, I'm looking for rejection at resistance. That's my setup. I'm looking for price to do this and sell off. That's what I'm looking for. This is my setup. Looking for a strong trend up to resistance and looking for a short at the resistance as soon as price action rejects this this region here. That's my setup. Trigger is the T. Or trigger is, okay, at what point will I trigger the trade? Now this is the setup. That doesn't mean I'm going to enter. Where am I going to enter? Am I going to enter here before the move has occurred? Well, no, that's still just a forecast. It's not really confirmed. Am I going to enter when price is here, right? That might be way too late from where you could initially get into the trade. Okay, so you need to outline your trigger point. What's going to be my trigger point? Now, you might suggest that, if I just do this, that when price action breaks a prior low, that low there, it's a small low, but you get the gist, right? So when price action breaks that low, right, breaks this support line over here, this mini support line that we have here, that's going to be my trigger. Okay, that's going to be my reason for trigger. Okay, I'm ready to get into the trade now, right? And then we fall into execution. Okay, now how do I execute this trade? Okay, now that I know, okay, we've met the trigger point, I'm ready to execute I'm ready to move to the next step, which is execute the trade. How am I going to execute the trade? Meaning, am I going based on the candle close? Am I going based on a certain price being met? Okay, so let's just say we're going on a candle close. So as soon as we see a candle closing, so somewhere down there, and that's my execution. So that's the execution sort of this trade, right? And then you have M, which is management. Okay, so price starts to go in my favor. How am I going to manage this trade? When am I going to move my stop loss from here to this point, or to this point, or to this point? Right? This is the process, or this is what you need within your trade plan. This is how you put together a strategy. You've got to cover each part. You need a setup, trigger, execution, and management. You might even want to add to this exit rules. Okay, so let's call it STEMmer, right? STEMmer, okay, which is what is your exit rules? If you see a large correction occurring, you might say, okay, I'm going to close my position. Or if this trade is expected to last 2 hours, it's taken 4 hours and it's still sort of hovering around here, I'm going to close the position, find opportunity somewhere else. Yep. So you can work on sort of STEM or STEMmer to sort of give you that a complete system is what you're looking for. Is a complete system. Yeah. 90% of what's on YouTube, guys, is just purely setup, right? What's my reason of getting into a trade? That's all you're going to see there, right? But there are so many other areas that you must work on, right? We've not even covered, within this, risk management, scaling in, scaling out of a position. So all of those things are, additional parts to what you're looking to do. It can fall under management, to be fair, but you might want to sort of, work on each of those. Yeah. So that is covering sort of step, right? And that process. Now moving to the next part, right? Now all we're doing now is going to be focusing on execution. When is a good time to execute a trade? When is it a good time to execute a trade? Now this is what I'm going to be covering. Okay, this is what I'm going to be covering is execution. Now if I delete and yeah, come to this. Right, so I'll do it with a demonstration, well, an example. Okay, so let's assume got two pivot points, support, resistance. Yeah, let's call this 90 handle, so it reaches 90, this reaches 100. Okay, this is right. So let's assume that price action has tested this level, multiple times, right? It's on this, then it comes to our support region, holds this region, eventually it's somewhere up here, right? We are here. This is where we are. Now, what is your thought process, right? What is your thought process? Now, we know what the setup is. I've just covered the setup. In this case, in this example, the setup is we expect price action to reverse, reaching this resistance level, which has had 1, 2, 3 key touches previously, and it's also a round figure. So that's 4 reasons why this is a key resistance level. This is a strong resistance level. Okay, it's recently historically shown resistance, shown sort of, you know, a lot more selling pressure in this region here, and it's also at a round figure. So you got, you know, you're adding amount of confirmations to potential short. So we're looking for that short. Now the question is, when do I enter that short, right? When do I enter that short? Now that's what we're going to sort of, you know, go into detail of, right? Now, if you're thinking at this point, oh, I'm getting short now, I think you're far too early. You're far too early. Okay, thinking of getting into a trade now. Let's just do that as pink, right? Getting in sort of at this point here, in my opinion, is extremely early. Why? Let's think about why that is. You know, the main factor is, right, that yes, historically we've seen it reverse, but you're now expecting it to reverse before it's actually, you know, it's proven that it's going to reverse. It's shown you no reason why it would actually reverse now. Okay, so even though you have the forecast that this is what could happen, but you do need to sort of follow through before you execute that trade. Okay, so because just as easy, what could happen? It could go up to here, reject, boom, straight through the resistance, going on to make new highs. And that's probably happened many times to some of you guys, right? So that's why this setup here is a low probability setup, right? Let's just say, let's give it some percentages. Now, these percentages are not fixed, meaning, you know, this is not something that, you know, I've gone back and done a sample size and, you know, seen this is how many times it has occurred, because with some of my data, it's probably shown correct, and other times it's not, right? But let's just say it's a very low probability setup. So I won't give it a percentage, I'll say a low probability setup, okay? It's a low probability setup, okay? Now, generally, what you're gonna find is if I look at my sample size, let's do, you know, this is a sample size of 20 trades, yeah? I'm gonna do a sample size of 20 trades. By doing this sort of low setup, I've taken sort of 20 low probability setups. I've got a hit rate, let's say, you know, I don't know, 20%. Yeah, so that means out of 20 trades, I've only won sort of 4 trades. Okay, so, you know, I've not won enough trades. I'm negative. I'm losing money with this type of entry point. We're only focusing on the entry, guys. Right? Yeah. So that again, you know, it's not sort of a great setup. So please don't assume that something's going to turn around. Wait for that to occur and then contemplate whether you want to take that trade. Now, moving on. Price comes up to sort of the resistance points we've identified, and then we're looking for that short. Okay, so now I've entered in. Let's assume, actually, let me just do it another way. Let me just do it based on candlesticks. Okay, let's assume that, okay, price has done that. Okay, so we've got a, you know, strong sort of rejection candle being formed here, sort of a doji, sort of a long wick to the upper side doji, and then we've got a Marubozu candle with little sort of no, you know, wick to the high or wick to the low. Okay, so a bearish Marubozu. Prior to that, we had a long sort of upper side doji. You might say, yeah, that's my entry point. That's great. You know, I'll take this entry point. No problem, right? And with that entry point, you also need to define your stop loss. So your stop loss somewhere in the region of a hair, above your resistance, and then your target, let's assume we're going for these lows. Okay, so that's our TP. Okay, now look at the reward to risk ratio. Fantastic, right? That's a huge reward to risk ratio, right? It's a great early entry point into my trade. Okay, and you know, I might find, let's just say this is sort of, you know, E1, that's your E2. Okay, now this I'll probably say, you know, is to probably low to mid in probability wise, low to sort of medium probability in this region here, right? It does depend on, you know, a number of factors, such as how many prior touches, have the touches been recent, is there a round figure? So those are the sort of, you know, key points I'll probably stress. So this low to sort of, you know, let's just do L, let me just do 1, 2. Okay, so LM setup here. Let's just say Now, this has probably worked, let's say, I don't know, let's go with 30% of the time. 30% of the time it's worked, or 35, whatever you want to, say out of 20 trades. Again, not so great. So, what could happen is we have a bit of rejection, a bit of profit taken, not really a lot of selling pressure coming in, not sellers really stepping in, driving the market price lower, and also you have a large buyer stepping in and breaking through, right? So not such a great setup, but a great reward to risk ratio. So even if, for example, you have a 30% hit rate, and if you actually achieve with each of those trades a reward to risk ratio such as this, you'll make your money. So do remember that. It also depends on the reward to risk ratio aspect as well, right? But yeah, now, does that mean that's it? That's the only two types of setups I have? No, you can still take in trades, but be a bit more conservative, or what we would probably say is more confirmation. I need more confirmation. You might say, okay, I'm going to wait for the break of a counter trend line. Let's assume these higher lows and higher highs and higher lows, we had a counter trend line such as that. Okay, I'm waiting for sort of price action to break through that through this region here. Okay, so let's assume you have this. Right now, that's my potential third entry point. That's my potential third entry point. This is sort of a medium probability setup. Medium probability setup. Okay, right. Stop loss stays the same. The stop loss does not change, guys. I don't now tie to my stop loss in this region here and just put it behind maybe just a candle, halfway into a candle, right? So stop loss doesn't change, take profit doesn't change. I've got a medium sort of entry point over here. You might find that this works 50% of the time, right? Now you've got a lower reward to risk ratio, but you've got a higher confirmed trade setup that reoccurs on an ongoing basis, right? Based on this sample size that we've taken of 20 trades, right? Now, for some individuals, they might think, oh, this ain't enough. I want more reward to risk ratio, not reward to risk ratio, sorry. They want more of a confirmed entry point. Okay, let's just say that we had, if I could sort of, let me just see if I can, I know that might just remove all of it. Let's just say that, this was a strong swing low. Let's just assume that it was something like that, right? That there, okay? So that is the prior low. That is the prior low. Generally, a trend comes to an end when it breaks the prior low or the prior high. Do remember that. Not a trend doesn't come to an end when it breaks this kind of trend line. Most often, it's still within the trend. It's probably doing an equal test of the prior low, potentially. But in this case, we're looking for a break of the prior low, and that's my reason for entry point. And you can say, okay, I'll get in on this reason, right? So that's my fourth entry point probability, right? And that's sort of, medium to sort of highly probable setup there, right? And that's where you start to see that, right? So you see that this has got a 60% hit rate, okay? You've got a 60% hit rate of trades occurring. It still meets your reward to risk ratio, and that's your sort of entry point. If you want it really probable, the later you leave it, the higher the probability, but the lower the reward to risk ratio. So let's assume that, okay, I'm waiting for another candle just to be assured that this doesn't just, was a false breakout and then reverses. We wait for another candle to break through, and then I'll enter at that point of it. That's your sort of, your fifth entry point. That could be sort of a high probability setup that this is now likely to continue to the downside. Nothing is for sure. Nothing is 100% probability. Okay, so a high probability might be, say, okay, 70% likely is going to go in your favor, which is great, right? So that means out of 20 trades, only 6 went against you. The rest were all winners. It's huge profit, right? As long as it meets the reward to risk ratio. But you can see how from this fifth entry point, how this is probably now probably 1-to-1, right? That's a 1-to-1 to your second initial sort of setup over here, which is sort of that entry to that stop, and then entry to your TP. That you can see is, I don't know, let's just call it 7-to-1, right? 7-to-1 setup there, 10-to-1 setup there. Right? So that will increase. That will be naturally the earlier you enter into a trade, the higher the reward to risk ratio. The later you enter a trade, the lower the reward to risk ratio, but the higher the probability. And that's naturally the trade-off that you're going to see in trading. And so it's down to you, each of you, to now go out and trial each way, each type of entry point based on a sample size, right? So work out your sample size, Whether you want to do 5 trades or 10 trades or 20 trades or even 50 trades, it's up to you. You know, how much confirmation do you need for you to sort of, you know, run with that going forward? And then you can sort of start to work out your entry points. There we go. So that covers you know, in deciding when to enter a position, and it's all based on you going out and trying different variations of what I've defined here.